Hey guys, welcome back to my channel. My name is Joe. Today is March the 27th. Hopefully you're having a great weekend. In my journey to 250k, I'm currently at 133,828. For the week, we're down by about 8.3%, which is about 12,000. For the month, down by about 12,949, which is about 8.8%. 3 months down by about 10%, which is about 15,000. And for the year, up by about 50%, which is about 44,000. So in the journey to 250k, I will be introducing optional plays that I'm in so that you can kind of see how I'm growing my account. I want this transparency to be in both the stocks that I've shown you guys as well as the option plays. I think most people voted that on Sundays to be showing my whole account, so the plays I'm in options, and so that I can see the ones I'm losing money. I think it's a good idea because then if you see I'm losing any money, you avoid those at all costs. If I'm getting money, you can have those in your watch list, as well as just seeing my portfolio, the stocks that I'm gaining, the stocks I'm losing, so that you can also be very careful in some of the speculative plays that I'm in or any long-term plays that I'm in. So I'll be talking a little bit about how to do call options in Robinhood, and I'll give you an example with this Uber 58 call that I purchased recently. Let's start first by going to the Uber stock itself. This is how you will start buying stock options. So trade, and then trade options. If you don't have this active, just go to your settings and activate it. And I want to kind of read the description. I think they have a decent description here. Buy a call, so it gives you the right to buy 100 shares of the stock at the strike price by the expiration date. You could profit if the stock goes up, and you could lose money if the stock goes down. So what do you see up there? It's dates, of course. So those are the dates you need to pick for the expiry, and you can pick, usually I will say, if there's some really big movement being expected, 2 weeks is safe, but I usually say 3 to 4 weeks for the most part has worked well for me. And one thing to remember is when you look at a stock and you think of doing a call option, wait for the dip. I have to repeat this: wait for the dip. Don't wait for it to rally and buy the call option. You'll be very surprised when you lose money, because for the most part, even if the direction is correct, you have to make sure you are picking it on the very low bottom of the price. So don't make that mistake of buying high. Let's put that out of the way. Then the other thing is, we have the call. You have to make sure that the buttons which are selected are correct. So buy, call. Don't be in a rush when doing calls. Just take your time, because this is your money you're risking. And we'll talk about this price. You can see 55, and you can see prices above and below. So we have some terms that I want you to be aware of: in the money, at the money, out of the money. So in this example, we have the share price at 55. That is at the money. So if you bought a call option for that amount, that's at the money call option. If you went and did, let's say, the 56, it's kind of above, right? So it's out of the money. And then if you went below, let's say 54, that is in the money. Let me just repeat with a different example. So let's say we have a stock price which is $40. If the strike is 45, that is out of the money. If it's at 40 and the strike price is 40 and stock price is 40, that's it at the money. It's at that price. And then if it's 40 stock price with 35 strike, that's also in the money, right? So hopefully that's not confusing. So just be aware that since the stock is for this example 55, if you're below that, it's in the money. If you're above that, it's out of the money. And how I started practicing option plays was, I used to go usually for out of the money because they were cheaper, and that's the biggest disadvantage. But that's how I started learning. You learn by doing. So you have to pick a direction. For the most part, if the direction is correct, your gain might be small, but the risk is very also small. So when I started, I just did it on my own to learn. So I will just pick and say, oh, okay, let me try this 62.5 call. Based on my analysis, if I see this stock dipped the previous couple of weeks, I know it has a trajectory. So if I say that the time frame will be a month, then I'll just say, okay, I can risk $18 to learn. That's how I started. You have to do to learn, but for the most part, I think just continue researching online, reading and all that, and you'll be fine. So that's kind of the biggest deal I want to say. The other thing is, never be greedy. So you have to have set up like a return amount you want for your place. So for usually, in my case, 20 to 50% is good enough, and I usually am out of a play if I feel the amount is a lot. If it's a small amount, I'll just let it ride for a while, even up to 100%, sometimes even more. But make sure you are very diligent in just taking profits. Don't be greedy. If you can't get over that, I think you'll have a hard time with options play. So let me show you an example of this one that I have. It's expiring next Friday, I believe. So I'm out 47%. So you can see afterwards it's going up. So that tells me it's a good thing. I might hit that 50% return, and then I'll just probably sell on Monday. Or if I see a good rally, I will probably hold for another more day and then sell. But one thing to remember is 1 to 2 weeks before the expiry date, there's a lot of things coming into play, and I'll talk a little bit about the Greeks. These are very important things. I will have a video just dedicated for this, but one thing to remember is the theta is time decay. So you multiply that by 100, and if you didn't know, an option contract is like 100 shares, based on the description we just read. So you usually multiply these numbers by 100 to get an accurate number. So you multiply this negative 0.072 by 100 to get how much you will lose per day. And this also gets affected by a lot of things, but that's one of the most important ones I want you to know. And then the delta usually is the movement in relation to the stock price. So if it moves by $1, this will move by that fraction multiplied by 100. But I won't touch on Greeks today. I wanted first to kind of show you the basic of the basics, and I will also show you how to get out of the plays in a video next week. But for the most part, let me know what you guys are hoping for us to be doing, because I'll be showing you the plays I'm in. I'll be doing the research, and I'll be showing you how many I've got in. For those who are very new, I will say don't risk a lot of money in learning. Just have a really small amount to practice with, and you'll get better with time. Practice just makes perfect. With this market, I think there's an opportunity for you to benefit on the downside and also on the upside. So you don't have to worry that, oh, it's red, everything is red. Actually, that might be a good thing, because if things are going in the wrong direction, you can get a put, make some money out of it. You can do covered calls, make some money at the same time when it's a red market. So there's so many ways to benefit, but I just wanted to make sure that I covered the basics first, and then from there we can just move on to the next level. So thank you so much for reaching this far. Please subscribe to this channel. Gives the video a thumbs up for YouTube algorithm. We're growing so fast. We're targeting to have 1,000 subscribers in a few months. So I'll really appreciate your support. Comment below and let me know if you're trading in any options, if you prefer calls or puts, or how you've been going about it. And also remember, you can use my free link to get some free stocks with Webull, as well as if you're still new in investing, you can get also a Robinhood link down below. Be green, be safe. See you in the next one.